What happens when a top LP asks the one question that exposes most fund managers instantly?
People come to him and he just asks them a straight question, right? How are you differentiated? What's your angle? And so many prospective GPs cannot really answer that like in a coherent way or like with some sort of cogent differentiated strategy.
The brutal reality behind every fund manager's journey.
This is a very hard thing to do. We've all felt this super high of meeting somebody exceptional who decides to trust you, and that feeling of like excitement and infinite gratitude. And we've also been ghosted, all of us. And we've also been through lots of no's, some of which are very painful because they could be existential.
But here's what separates the real from the pretenders.
Your edge is then how you combine that thesis with what you've done before. So that's what's called the GP thesis fit.
When the stakes are highest, founders reveal the truth.
When things were going poorly, how did this VC react? What was their level of involvement? Did they say, lose my number? Or were they with you till the end? Did they try? Were they still a valuable? What would you recommend them to other founders?
And LPs can spot the difference faster than you think.
On call number one, either this person doesn't have a superpower or their superpower is not in venture or their strategy, like 80+% of the time.
The solution isn't what's in your deck, it's what's in your DNA.
Understand what you're uniquely good at. Build your own personal model because everything else can be copied.
Discover how to build an unshakable edge before you ever pitch. This is the European VC podcast's unfiltered conversation on what LPs really think and what fund managers need to hear.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Welcome back, everyone, to the European VC podcast. We have another episode where Carmen, Evan, and I are jumping in together, all three of us, and doing a big discussion about everything we think is important to discuss in the open that sometimes is not spoken about as much in the open as it could be. We're not trying to talk too much about necessarily what's happening on the political scene. We're not trying to cover what happened in the news last week, but rather these core points that sometimes when you're wanting to understand better what LPs think, what VCs think, but maybe don't have access to people that will go directly and tell you what they think. We're trying to do that here on these episodes. So Carmen, Evan, thank you for joining me for this again.
Thank you for having us. I think what's funny is by the time this gets published, people are going to be like, what political thing from last week? Because every week there's a new political thing.
Right now, we're all waiting for the Epstein papers. So I have a treat for everyone who's watching today because I have a picture of my dear little daughter here. She's very beautiful. Carmen is smiling and being very Spanish, so that's great. And here she is with a cocoa bunny that she got. And she has a mad eye, crazy eye, because she started doing those every time we take pictures. I don't know what's up with that.
Love it.
Kids love to sabotage pictures. It's just they're like, sorry, you can't have one good one.
Evan actually has a bunny with his name, even not just his kid.
There was a printing error. So my son wound up with two bunnies, one with my name and one with his. He got a bonus bunny, I think. Yeah.
Exactly.
That is cute. Alba is very happy that she now has a bunny that says Alba on the ear and Cocoa on the stomach. I wanted to bring it up just because I want to use it to those that do not know Carmen and Cocoa yet. Carmen, you are a marketing branding expert. When my wife came in with a gift or the package from the post office, she was like, I don't know what you ordered, honey, but here's a pink box for you. And then I said, I know exactly what it is. So that was pretty funny.
Thank you so much. It makes my day. Honestly, it's just the joy. Like, it's my guilty pleasure is to build Cocoa's brand, and I'm just really lucky that you all indulge all my little hobby.
All the chocolate makes it a lot easier. Yeah, it's an easy sell.
That is true. Pink and chocolate, those two things you can never get too much of. All right. With this set, the first topic I want to dive into today is a bit about the same as we just spoke about, the importance of being brutally honest in venture. It's something that obviously I myself as a as a VC podcaster gets asked by a ton. We're also acting as LPs, and for that reason, there's a lot that reach out and say, "What do you think about this?" And I kind of run this deck by you, and so on. And I will also, of course, say here how I think about this and how I tend to respond. But maybe, Carmen, if I ask you first, how do you think about this? Why do you think it's an important topic to discuss this point of being brutally honest in venture?
I think it's a very important point, and it also, by the way, it's the same reason why it's important in like many aspects of life. I almost think about it in two dimensions, which is one, being brutally honest about how likely it is. Like, we know how hard it is to build a fund, to raise a fund, to like be in the deals, and whoever decides to do it should come into it with very clear expectations. I think a lot of having like clear expectations management is very important. So lots of emerging managers or people considering starting a fund that have come to me know that I don't sugarcoat anything. I'm always gonna explain the good and the bad, because just to paint a rosy picture like doesn't help. Like, it might help me, like, and but it definitely doesn't help the person that I have in front, right? And so I think that that's one. And also on the other side is, we as GPs, like big and small, let's stop like also just painting a picture that's not real, right? Like, sometimes I see GPs that have spent like a year fundraising, and I know because I helped them put the deck together, and then suddenly they're like, "Oh yeah, it took me 4 months." It's like, genuinely, like, there are so many people out there, so many GPs that are struggling, and to make people feel like that they are having it harder than you is just not okay. And I always, like, in that, I'm very, very honest. Like, this is a very hard thing to do. We've all felt this super high of meeting somebody exceptional who decides to trust you, and that feeling of like excitement and infinite gratitude. And we've also been ghosted, all of us, and we've also, like, been through lots of no's, some of which are very painful because they could be existential. And for any GP going through that, every GP that you see has been there. It doesn't matter the TechCrunch article, how like these LPs that they like now have, and doesn't matter. They've all been there. And I think it's very important for anybody going through fundraising or going through building a fund to know that it's not easier for anybody else than it is for them. And we should just start like painting the picture as it is, because it doesn't help anybody not to.
I think you're absolutely right. And you make a really good point when you say everyone struggles. So I think there are some that maybe do not struggle as much as others, but there are very, very few. And that's also because the majority, almost everyone, builds as large a fund as they can get away with. That is the majority of the market. So, and thus it becomes a self-fulfilling prophecy. So maybe you can raise 20 easy, then you'll raise 30.
But this is important. And again, this is me being like honest and vulnerable, but I am aware, and I've been in events and everything where I've been like told this, like, I would be classified, if you look at the European like GPs, as some of the ones who got it easy, right? Like, as in, like, you would see like who got it a bit easier than others. And when my LP base, like, is not, I've got some of like the best, it's still very hard. Like, even those who got it easy got it hard. Even if the end product looks amazing and got some incredible institutions, it was really hard. And I think that it's just no point in making it look like you didn't have to work for it, because it makes lots of other people feel highly inadequate, like they're not good there. And that's just like not good. And by the way, this is not just here. This is like, I remember, this is the best example. The typical kid at school who got good grades and said he didn't study. Lie. Effortless is a myth, and nothing extraordinary is achieved without an extraordinary amount of work, pain, joy, but also pain. And let's all be like honest about it, and try to help and support each other, and be open about that, I think.
It's funny, I have this story with preparing for the European VC podcast with guests, because we've done 400 episodes now. There were some people that would always be tons better than everyone else. And it would always be the most successful GPs also. So you kind of then go on very quickly to think, it's because they're so successful, they're so smart, they're so incredible. But what I realized was there was a pattern. Even when we didn't share a script for them to talk through, because we didn't do that in the beginning. We then realized they have it. They actually have written stuff. Even if they haven't shared it with us, they would have it on their papers in front of them. And I first realized it when Carlos showed up, and he then said, "Okay, guys, here's what I've thought we should do." Carlos from CCAM, and then he had the whole take on how he wanted the podcast to be, the topics he wanted to cover, the angles, and that's where it dawned on me: the best speakers that everyone just assumes can get up on a stage and be incredible, they are like that because they prepare. And I think that it's the same thing when it comes to these to fundraisers.
Everything.
It looks like it's just being done simply and easily.
Yeah,
No. It's the main thing they do. That's why on the podcast, I often ask the managing partners, how much time do you spend fundraising? Because managing partners, even of the largest firms, tend to spend half their time fundraising at least.
Yeah, I mean, I think fundraising is obviously harder than it looks. And from the LP angle, obviously there are things we could do to make it easier and things we might do to make it harder. I think actually though, before even going out to fundraise, right, something that I think is super important is not only getting the feedback, to Carmen's point about like, how tough is this going to be, but actually going to people who you trust, who can actually give you raw and honest feedback about whether you are sort of unique and differentiated. I remember talking to Charles Hudson about this precursor. I find him to be extremely thoughtful about things like this. And he basically said, people come to him and he just asks them a straight question, right? How are you differentiated? What's your angle? And so many prospective GPs cannot really answer that like in a coherent way or like with some sort of cogent differentiated strategy. And I think what's really challenging here is that when you're thinking about launching something, who do you go to? Go to your friends, right? Your friends in venture, but your friends. And your friends don't want to kill your dreams. They may have some sort of like smoothing around the edges that they do, right? But in general, most people's friends are going to say, yeah, this is great. You're amazing. I support you. The world needs another B2B SaaS fund, like with $20 million. Like you can do it, right? I think you have to find people, whether they are your friends or whether they are just like friendlies, who can give you raw and honest and brutal feedback. Because even in the case where your thesis really is unique and differentiated, even in that case, there's still room for critical commentary. And either you're going to get it when you go into the marketplace and you're going to get it from LPs, either directly or indirectly. It's much better for you to get that before you actually go to market and fix whatever needs to be fixed or sharpen whatever needs to be sharpened. And I think a big problem is you wind up in an ecosystem, right, where you are friends with people who have raised funds. You go to those people. They don't want to kill your dreams because they didn't want somebody to kill their dreams, right? You're friends. And so you don't really get that feedback that you need and that you really need to hear before you actually decide if you want to go to market. And so I think there's an element there where, people need to really look through their Rolodex and find people who are going to give them critical and honest feedback, not mean for the sake of being mean, but just here are things that you're going to find out if you try to go to market. Let me spare you the pain so that instead of this being, a level 10 difficulty, we can make it a level 7 difficulty, right, on fundraising. And I think a big problem is that people don't do that. They go to their friends don't want to be the dream killers. And so you wind up with people coming to market who probably either shouldn't be coming to market in the form that they are sort of presenting, or maybe they need to be rethinking coming to market at all.
This is actually just there because I think it's very, very important. I mentioned clear expectations management. There's a side towards oneself about it, which is like takes the form of self-awareness, which is very important. So you need to know what is it that is unique about you. Some people put it in this brutal way of why do you need to exist? But it is like actually like a good way to put it. It's like, what is your unique edge? How does that unique edge fit in the context that you're going to be investing, in the context that you're going to be fundraising, right? And build around it. And I think that piece of self-awareness, which is the same with founders who we invest in, is also absolutely essential because the market's it's not just hard to fundraise, it's also super competitive. To invest, to be in the best deals. It's so long term. You really need to know what is it that is unique about yourself and build on top of that. And also make sure that there's a market like Superpower fit, right? I had this conversation with one potential emerging manager who wanted to do something around LATAM. like my point to her was honestly from an LP perspective, it's so hard to raise in Europe, to invest in Europe. Like money for LATAM, maybe somewhere else, but in Europe, it's going to be very scarce. And so that idea of knowing your superpower, knowing your product and how it fits in the market is very important for sure. And looking for people to Evan's point that can be ruthless about it is key.
Right. The same thing that you as a GP would expect from a founder, meaning like, have you really thought about your product market fit? Have you really thought about your edge? Have you really thought about all these obvious things that maybe could go wrong? You should be asking yourself those questions, or you should be finding people who can ask you those questions. Again, it's just hard because the people you're most inclined to go to are your friends who are not going to give you the same sort of grilling an LP is going to give you. And so you wind up getting feedback that is helpful, but doesn't really put you in a meaningfully better place to prepare you to go to market.
You both mentioned the edge many times and the importance of being unique. Something that I've been really trying to hammer into the ecosystem, the importance of understanding what do we mean when we say edge, because everyone has heard it. Every LP is taught to say it. You very quickly, just by watching a few podcasts or reading a bit on the internet, you're going to very quickly realize as an LP, okay, when I talk to VC managers, and here I talk about LPs in this manner because a large part of the people that end up bagging managers are not sophisticated LPs. Sophisticated LPs are completely in their own territory. Someone like Evan or Isomer or Pension Fund, they have their own framework. They know everything, right? But a lot of the capital comes from family offices and individuals that are not used to diligencing managers. So they very quickly jump to nomenclature or the ways of the industry to talk about things, and thus they quickly get taught to ask about the edge. But they honestly don't know what do they mean by that question? What are they looking for? And the VC managers that are also taught that they need to, have a reason to exist. They need to have something unique to bring to market. They need to have an edge. They often do not know what the answer to that is either. We have coming out a white paper for this reason. I wrote that piece because I thought it's so important that we define what do we mean by it. My take on it is that you can basically, I call it the elusive VC edge framework. And I say that first point is unique thesis. So, okay, you want to have a unique angle on something in the market, be that you've seen industries and society and whatnot line up to create an inflection point in a technology or a vertical. And for that reason, I think defense tech is the right thing right now. Perfectly fair. That's all good. Many GPs kind of end their talk there. That's their edge. No, that's your thesis. Your edge is then how you combine that thesis with what you've done before. So that's what what's called the GP thesis fit often. So what investments have you done? What's the network you've built around you? What's what people know you for? All these things. How does that align with the thesis that you have? That's the GP thesis fit. And that's all good and well. To me, okay, now you've done okay. You've done better than most if you describe that. But then comes the next level, which is, I call it the flywheels and the reps. So what have you then done for your firm, for how you work, for everything you do to make sure that you're building reps within this thesis and within this network and further expanding on your edge, but also created flywheels, because almost every emerging manager is incredibly capacity constrained. We do not have a lot of money to throw around. We do not have a lot of resources and manpower to throw around. So it's so important that everything interlocks. And if it doesn't, you're going to end up, not having the ability to realize the initiatives that you want. I've seen a lot of emerging managers having great thoughts about, we're going to do this event, we're going to set up this program, blah, blah, blah. And then when boots hit the ground, you realize you're going to spend 50% of your time fundraising. You're going to try and deal with 15 fires happening at the same time in the portfolio. And by the way, you also need to find some new deals. So it's so important that you build these flywheels. And then, of course, there's what's the market and technology and the competition space that you're tapping into and really having a thorough understanding on that. And then there's the core skill of, are you a good capital allocator? Most emerging managers, either you come with great points on the GP thesis fit in terms of your operator background, and that you actually have founder empathy and all these things, or you come with capital allocator strength. There's not a lot that come with both. This is why I am a bit annoyed with the edge word, because everyone asks it and everyone tries to demonstrate their edge, but not a lot of people have thought thoroughly about what are the different factors that create an edge, and then are thoughtful about how they present that and talk through that. I've seen incredible managers that don't talk well about it, but once you drill into it, you realize, okay, everything is there.
Yeah.
Does it make sense, guys? Do you think I'm just on
Carmen,
a high horse here?
you sound like you're ready to go.
Well, you know how much I love superpowers. So I agree 100%. I think there's a part of knowing your superpower and also how you execute on it. And that both is totally necessary, and any framework can help. So first, two recommendations on this, or two things to share. One is there is a great blog post called Differentiation by the Not So Boring guy. And my husband found it a couple of years ago and sent it to me because Superpowers is my equivalent to Edge, basically. Like I used it a lot. But I use it a lot because it's been very helpful for me. So Cocoa, I'm very clear why. Cocoa, lots of people ask me, oh, why will Cocoa not be bigger? Right? Like, and I always say that I don't know if it will be bigger, that's not my plan, but the reason it's not my plan is because I know that Cocoa can do what it can do in the ecosystem because it's small, right? Now, Cocoa is built around building relationships of trust with founders and investors. That is what we do. We don't sell money, nobody talks to us for our check size. Like it's building relationships of trust with founders and investors. And in order to do that, you need to be small. Now, why is that Cocoa's like core value prop to the ecosystem? Is because that is my superpower, right? Like it's built around what am I uniquely good at? Now, landing there wasn't necessarily an easy process. And I always say that Cocoa wouldn't probably exist if I would have seen the market opportunity that I saw around access when I was 22. And the reason is that for me, like IQ and being smart was a condition of self-worth. Like I got the best grade at school. I got the best grades in uni. I was at Morgan Stanley. Like I was trained on like intelligence was what defined me. And at one point in my life, thankfully, when I was like early 30s, I realized that actually people were not drawn to me because of my IQ. I mean, I still hope that people don't think that, like, but it's not what was like uniquely like sort of striking to people. It was that like people like to build relationships with me, right? And so it was much more EQ. And that even like realization that my true superpower is EQ, not IQ, and building Cocoa around that superpower and owning it, accepting it. Like, not trying to be two things at the same time, not trying to be everything at the same time, just focusing on what you know that you're absolutely uniquely good at and accepting it. That's what has like basically built Cocoa. And not just accepting the superpower, is also accepting the trade-offs that come with this. Right? Because there's no perfect kind of assumption. There's not just upside. And being small and building around EQ has a set of trade-offs. You just need to make sure that you accept those trade-offs because those trade-offs are difficult. But if you accept them, they're your trade-offs, you have a healthy relationship. And going back to the article, just to close, this article around differentiation, Patrick, who's the author, makes this amazing point about his high school teacher who was incredible in carving pumpkins. So the guy carved, I don't know if it was like 1 ton of pumpkins in like 16 minutes, like crazy. And the point there is, understand what you're uniquely good at, build your own personal monopoly. Because everything else can be copied by somebody else before, and now also by AI, it will get copied. So literally own whatever. Is it carving pumpkins that you're amazing at? Do that. So going back to the fund, don't build a fund because everybody's building a fund and you're seeing like cool people in TechCrunch like announcing their funds. Build a fund because you fundamentally believe that you have a unique angle, edge, superpower that the market needs and that only you can do. Because if not, to do it just because it's the cool thing to do, it's just not going to work, right? And so I think that that's what to me is an edge, is something that you're uniquely good at. And now it needs a lot of self-awareness and it needs a lot of acceptance.
I agree with everything Carmen said. I would add one point, which is I think the way to think about your edge is it's probably not something that like a bunch of people have told you is the marker of success. Being like, your edge is not that you went to Stanford and you worked at a FANG and like everybody thinks you're really cool because you worked on like some new Netflix like ad serving feature, right? Like that's like not right. That is not a superpower. That is not an edge. That's not a differentiator. Like if something has been a mark of success that has been like externally validated in that way, no, that doesn't mean external validation is bad. It means that if the like the genesis of this superpower or like supposed superpower is that a bunch of people told you how cool it was that you went to Stanford and worked at a FANG, that's probably not a real superpower in that there were a lot of other people who also went to Stanford and worked at FANGs, right? Like that can't be everybody's superpower. You know, if you were the founder of a FANG, right, and now you're launching a VC firm, that might be different, right? If you were employee number 1 or employee number 2, that might be different. Maybe. I'm not sure, but at least like we can have a conversation about it, right? But if you're sort of like, I don't want to say generic because it sounds very sort of pejorative and like it's talking down to people. But if your sort of superpower is that like people in your hometown thought it was cool that you went to Stanford and then worked at a FANG, it's probably not a differentiated superpower. It may have been 20 years ago, but in 2025, that is not a superpower. It has to be that there is something, some right to a secret. Now, maybe you worked on a very specific technology at 3 different companies in one angle, and you are the guy who knows regulatory technology or the woman who knows regulatory technology across some esoteric thing extraordinarily well. And now you're going to build an infra fund focused around that. And you really are the only person with that secret. I think that that is interesting. Now, the thesis may or may not work out, but interesting. I will say this both because we're friends, but also because it was validated during due diligence. Like Carmen's superpower is that she will run through walls for people. If you think that your superpower is also running through walls with people, go spend a week with Carmen and see if you can hang. And if you can't, then that's not your superpower. I think you have to figure out like, what is your actual superpower? What is it that like, how did you come to the belief that this is your superpower? And then how does that actually translate to the job you want to do, which is to be a venture capital manager? And if you can't really figure that out, probably not going to be a good superpower to go to market with.
I actually think that there's a hidden wisdom in using the word superpower. The point with superpower is that it's one that not everyone
It's
has.
unique. It's unique.
Well, it's not just that it's unique, right? Because there's so many people that are unique. I think we're all unique, but we don't all have superpowers.
No, the superpower needs to be unique. So superpower, exactly.
Exactly.
Yeah, I agree.
Yeah.
But my point is that venture, just as being a founder, building a breakout success is going to require an outlier. Being successful in venture as a VC also requires that you're an outlier. So part of my raison d'etre behind EUVC was coming from a firm where, to be honest, people were not anyone with superpowers. They were not outliers. Yeah, they could manage a bit of money, got the backing of the state. That's all good and well. But that does not make them in any way the people that are going to create a breakout fund. My point with creating EUVC was, if I can create a podcast where I bring these people on the podcast that actually have superpowers and show to the rest of Europe, to the LP base, to everyone in the industry, to the founders, what does a great VC sound like? What do they talk about? How do they think? I was hoping that would then help us elevate the ecosystem so that some of the people that do not have superpowers but are still in venture would be weeded out in time. Because I saw that we really had a problem with a situation where we don't have a lot of communication or public speaking by VCs in Europe compared to the US. So you had this benchmarking of European managers up against the US managers, that the average US manager does not transcend to getting to the European airwaves. You would only get the Sequoias and the Mark Andreessen, and everyone can kind of justify not being Mark Andreessen. That's okay. I'll give you my money, even though you're not Mark Andreessen. I think you're still a pretty incredible person. So everyone could kind of justify not being that. But by having a podcast that says this is the best we have in Europe, there's not a lot of justification to be backing a second-rate manager, honestly, because we have a lot of great managers that are fundraising constantly in overlapping verticals, in overlapping markets, So there's no reason for an LP to be bagging a second-rate manager. There's no reason for a founder to necessarily have to take money from a second-rate manager. And honestly, there's no reason for people to want to join firms or build firms that end up being second-rate. And we have too many of those, both in Europe and also in the US. I think it's absolutely there's a reason why we have, what's it called, the returns distribution that we have in venture. That's because we have a lot of people that are not outliers. We have a lot of firms that are not outliers. Either they were once and they're not anymore, or they just should not have been incepted. And that I really hope that we can solve by being more ruthless about what great is. Because I honestly think that it is very clear whether someone is an outlier or they're not. And that is a question to you. I want to ask you that question. To what extent, Evan, as an LP, do you think that you in the first meeting knows, does this GP have a superpower or not? Is this GP an outlier or not?
Yeah, so it's a good question. I will answer it. But before that, I just want to say, right, if you don't have a superpower that allows you to succeed in venture, that doesn't make you a bad person. It doesn't make you less than, right? It's just, is there sort of like individual career fit? Is this the right career where you are most set up to have the highest likelihood of success? I think that's the question you're getting at, right? It's not like, oh, you don't have a superpower, you're a bad person, right? Like you may have lots of superpowers. They just may not express themselves best in the context of being a venture manager. And I don't think there's anything wrong with that.
Like Carmen,
right? Like carving pumpkins, right?
You could. It's like there are many respects. Like we are sort of told what are our superpowers supposed to be, like in what and what's the path, and just there's this process of embracing what you're really uniquely good at, even if it's carving pumpkins. You know, like some people are uniquely good. Like I mean, even if you're an outlier in venture, there's nothing compared, could we say, to being like a doctor who can save lives. Like we all just need to focus on what we're really good at, regardless of what we're supposed to be doing. I agree 100%.
Yeah. So I think that's one thing, right? Which I think like people should really understand, right? Like nobody here is trying to like insult anybody or treat anybody as less than, right? It's really just like, can we spare you the pain of going to market when it's not going to work? And you as a person, how are you thinking about what the best opportunities are for you given your particular brand of superpowers? In terms of your specific question, there are definitely cases where you could see this person as a superpower. And there are a lot of cases where you can see this person doesn't have a superpower. Then there's like a smaller middle ground where it's like, I think this person may have a superpower, or they may have a potential angle. Is the strategy that they are, trying to deploy maximizing that superpower? Do they have a superpower, but maybe they're just not as good at communicating it to LPs as they are to founders, which is also a problem to clear, but that's sort of different problem. So I'd say there's a very small set of conversations that I have where you're like, this person has a superpower. Now, that doesn't mean we're always going to invest, right? Because we may say the strategy is just not a good fit for our portfolio, the size, the geography, whatever it is. But you sort of very intuitively feel this person is extraordinarily credible. The thesis makes a ton of sense. When you combine them, their superpower is being brought to bear on this thesis in a way that's likely to like maximize the returns for LPs. And I think there's a very slim set like that. There's a massive set where it's like, thank you very much, but this is not going to be not only is not a good fit, but I actually don't think you have something unique and differentiated, or you don't have a superpower that is expressing itself in this way. And then again, there's like a very small group where it's like, I think this person might have a superpower, but they might not be articulating it properly, or maybe there are some tweaks necessary here. So I think you can filter like on call number one, either this person doesn't have a superpower or their superpower is not in venture or their strategy, like 80+% of the time.
I think we're super lucky to have Evan being so honest, because as a GP fundraising, I think like LP mindset is a black box, which I'm sure is the same a founder feels with a VC, like, and just understanding like what LPs look like. And it obviously depends on the type of LP, but as you said, Andreas, like Integra and Evan are quite sophisticated. So having access to that, I think knowing what are the key questions that like an LP is trying to answer when you as a GP, it is like gold. Quick question to you, Evan. So as a GP, or as a VC, there are many times that there's almost like spoken truths about things that founders do that are not positive signaling, but apparently they don't know about because a bunch of them do it. I'll give an example, like dropping that you're raising a pre-seed and you mentioned that Sequoia has committed for the A, but like you're just you rather wait for the pre-seed and do that, like these type of things that or saying that you've got a lot of follower capital but are looking for a lead, like these type of things that are signals actually that are a bit of red flags. If anything, what's the equivalent? Like, what do GPs do that gives LPs like Cringe, that like the Sequoia moment kind of for me? What is the equivalent for LPs?
Yeah, we could probably do a whole podcast on this. I think what's interesting is there are a lot of things that GPs do that don't really do it for me, but there is clearly like a market for them. Otherwise, I think they wouldn't do them. Right? Meaning, I don't think anybody would tell you that they think that Sequoia committed to their Series A, but they're still raising a pre-seed if that didn't work on 90% of GPs. Like maybe you're like, this sounds ridiculous. I would guess that you are like the 10% who's like, this sounds ridiculous, and not the 90% that's like, oh, Sequoia is going to follow on. I better get in there. And I think that's true on the LP side as well. Like, I think these things only happen because they resonate with 90% of LPs. So the use of unparalleled network makes me gag inside a little bit. So that's definitely one. But no, I think the things that come up pretty often, right, are like the slide that you see with people's faces, right? It's like mid-level sort of like employees from, like financial services firms or fintechs or, bangs. And it's like, here are all the people back to me. And you're like, that's great. Like, but I don't know why I should invest because your buddy from college invested $5,000 like in your fund. I'm not sure what that means really. One that actually really gets me is when you see like a long-term sort of like projection. I see this occasionally where it's like fund 1, we're going to raise 20 million. Fund 2, we're going to raise 50 million. Fund 3, we're going to raise 100. I'm like, one, that actually doesn't look very good to me because we want you to be consistent with strategy. But also 2, it says a lot about your understanding of how difficult fundraising is. The fact that you think you're going to raise like 20 million now, and then like in 2 years, like it's going to be super easy, 50. And then the year after that or 2 years after that, we'll double it to 100. And then the last one, which is a little bit counterintuitive, is when I see a page of like advisors, because when you tell me that these people are advisors, what I hear is, as long as it's free or you're paying them, they're willing to like let you use their face, but they're not actually investing in your fund, meaning they don't believe enough to put their actual capital like to work with you. But if you are, offering them something for free, they'll take it, right? No big deal. And so I think those are the things where you start to see like there's a disconnect between like what you think is happening, meaning, I have this amazing roster of, people from Facebook, Meta, who invested in my fund. And I also have this amazing roster of advisors. And you're like, okay, but that actually says something about your sophistication and not the thing that you think you're saying actually. So those are the types of things as an LP that I think are a big turnoff that GPs don't necessarily realize. I'm going to be very popular.
No,
no. I think those are,
because it's actually useful.
Yeah, and they're pretty safe. Also, like I think it's great that you say it. I think it's also funny how there's such a big differentiation or difference between the fundraising decks that you see from managers. And I'd love to ask you how you think about that, because if you get Cocoa's deck in your hands, or you get Re-Rail, Carmen's former partner Anthony, you have 2 super sleek decks. Like everything is just flows beautifully, everything is perfect. And then you can get a Polish deep tech VC, and it's like you've just been handed a fucking PhD. And it's so funny because those 2 funds can be equally good, but they're very different in feel as the LP when you receive them. How do you think about that, Evan? The importance and the primacy that's often put on decks and the design of decks?
So I think there is a level of sophistication at this point that we have to expect, meaning, this is not literally day one in the European ecosystem, right? It's still early days, right? And there's a lot that has to happen to sort of continue to grow the ecosystem, but it's not literally day one. And so I think as a manager, you do have some responsibility to go hire a designer, right? That's done a deck before. If you can't do it yourself, and have sort of the aesthetic of Carmen's deck, right? Like by yourself, go out and hire a deck designer, right? If you are an adult raising a venture capital fund, you want somebody to manage, you want somebody to hand you 20, 30, $50 million. There is some level of like responsibility and investment that you have to put in to show you believe in this, to go spend 5 or 10 grand, or probably even less, honestly, just designing a deck that looks like what a pitch deck should look like. That's one piece. The second piece though is, right, let's figure out, even within whatever sort of like mangled mess I receive, is there an idea here that's interesting? Is there a GP that has, again, this superpower or access to a secret, right? It would be sort of silly, right? And not like, it would not be a mark of pride for me to pass on a fund in, a Polish deep tech fund that winds up doing 15x and basically fit our thesis in terms of fund size and stage, right? And sector focus, because I didn't like to look at their deck. Now, if the deck is incomprehensible, then that's one thing, right? But if the aesthetics are just a little bit off and I'm like, well, I can't have a conversation with you because your deck looks a little bit messy, I think that would not be really executing my responsibility properly. But I think you have a responsibility as a fund manager to come to market with something that looks reasonably professional.
It's so interesting to me because I think that LPs are different, like animal to VC, but it's so parallel. Like as a GP, you actually have a great sort of guide in what you expect from founders, right? Like, why do founders have to have a deck that can be like read easily, seamlessly, key messages of what you do, why is it interesting, and why you come across? Is because you're dealing with people, i.e. VCs, who have cognitive overload. So they, have to go through so many decks, and you need to cut through the noise. And it's the same a little bit as GPs pitching to LPs, right? You just want to make sure that your key message comes across. Whether like that has beautiful colors because you like colors, or is it all in black, or whether that doesn't matter. The point is you need to make sure that whoever reads it with limited attention span can get across why they should want to meet. And that to me is also like, again, a point of self like awareness and to a knowledge of the context you're playing in.
I actually think, Carmen, you have a perfect stat here, because I think you've shared before that in your deck, on one of your last pages, you had miscellaneous extra info, and then you had a bunch of storytelling on the cocoa bean or something like that.
Oh, you mean the pitch for founders?
Yeah,
yeah.
And that's the deck. That's the amount of time spent on that slide, which is really not important for the fund, is very viewed. Like you can see from your docs and that people are spending a lot of time on that.
Yeah. So this is the story, and I know what you're talking about. We got one institutional LP actually, and in Dobson you can obviously like track it, right? And we got this dude who spent like so many minutes on and I checked that it wasn't like just because he left it open, which sometimes happens, right? And I was like, what's like? And it was this slide of how to make chocolate, and I was like, oh, must be the junior, who like is bored to death, and then suddenly it's like something interesting, and then I checked, and it was the managing partner, who's so keen. And we also got one LP, he was a tech founder, not an institutional, but saying, I don't generally do funds because I don't like the fee structure, and I have my own access. But your slide about how to make chocolate totally caught me. And like, he gave us money, so I don't recommend necessarily that slide, but you need something that makes you memorable, basically, because we're going like, the noise is so loud. And so I think that's the point. And it also shows that you understand that, which is an important skill all over. But as a GP, just think of the things that are so natural for you to assess in a founder. You're being assessed on those as well. So like, just, sort of back solve it or solve for that.
Exactly. And I think this goes back also to the point before about like figuring out if you can get feedback from people honestly. Like, just send your deck to a couple of friends, like who can give you honest feedback, not just like, rah, this looks amazing, but real honest feedback, and let them break it down before you go to market. I have friends in venture who have sent me decks and said, hey, like, I want your honest feedback because I'm going to get it one way or the other. Right. And the way I'm going to get it, if like you don't give it to me, is that I'm going to waste 5 LP meetings and not realize that I'm wasting them because, slide 3 is not really explaining my strategy correctly. So like, just save me like 5 missed LP opportunities and 5-hour or 30-minute long calls by just telling me if this deck makes any sense or if I'm getting the message across.
I did that. I asked Evan to destroy my deck. And he very kindly took a lot of time to destroy it. And I am very grateful.
Yeah. I mean, I think it's like, I think that's a big piece, right? I mean, and we do it too, right? Like we are a firm that has clients and we have to go raise money. So we have the same thing where we have to really critically assess and figure out ways to critically assess, is our message getting across? And if we only went to people who were like, rah, rah, we love you, you're amazing, we would be doing ourselves a massive disservice, because we want people to love us, but we also want to make sure that our message is getting across in a way that gives us the highest probability of winning some business development opportunity.
On this interesting point, actually, because the idea of, which I think is one of the key takeaways here, is like, look for brutal feedback. Like, actually, how does it work with LPs and referencing? Any tips for GPs as they put together their reference call, like a names? And also, what is that like you ask? Because a lot of my references are kind enough to brief me after on what they got asked. And I find it fascinating, like the questions also that LPs ask. So what are sort of the key questions that you ask?
Okay. So in terms of putting together your reference list, right, I think you have to figure out what every person is doing there. Like, what is the unique angle or story that they are telling, right? And you don't want a bunch of people who are just like, rah, rah, you're great. You want your references to say you're great, but they need to be specific and have an actual purpose. Because if not, if I, as an LP, just hear a bunch of generic sort of like, they're great, I'm like, okay, lots of people are great, right? Tell me like why that greatness like allows them to win this deal, right? Or why it allows them to do this, right? Or how it actually helps me as an LP. The second one is, I think, like, prep your references. I think sometimes you will have, let's say, founders get on reference calls and maybe they haven't done a lot of reference calls before. And they say things that they think are what the LP wants to hear, or they think sound good. And maybe they're not actually conveying the message that you want them to be conveying. Now, that doesn't mean it should be scripted, but it does mean, hey, I think LPs are probably going to ask you about X. Can you sort of like talk a little bit about that, in this way, or here's how I think I would be thinking about that kind of question, and then let them figure out their own answer. So it doesn't sound scripted, but, sort of give them some guidance. And then the third thing I would say, and this really, really is applicable to Europe. So for everybody from Europe listening very carefully to this part, there is a big difference between referencing, I have found, in Europe versus LATAM, the US, and Israel. European GPs, for whatever reason, it could be cultural, it could just be because, they're used to how European LPs are doing referencing. They get really upset when you do off-list references, like irrationally upset. I don't know why. Frankly, it looks extraordinarily suspicious when you hear that, like when a GP comes to you and basically throws a fit that you did some off-list references, because basically what I am hearing is, I'm not upset that you spoke to the couple of people you spoke to. I'm upset that you're doing off-list references because you might stumble upon something that I don't want you to know. And so to me, I don't know what it is, but there needs to be like a European summit, maybe an EUVC masterclass on accepting that people are going to do off-list references, and that they probably don't only want to speak to the people that you've already coached and that they know have amazing things to say about you.
This is the problem. So, I didn't know this. Yeah. This. Now you understand why this is the land of GDPR. So interesting to me. Like, actually, I didn't know that this was. I think I get many screenshots of list references asking me if this is a scam. So they're just like, is this for real? Like, these are many founders who I haven't given any heads up. I'm like, oh yeah, thank you. I'm so sorry you have to spend the time, because actually I must say I really struggle asking for references. And I think it has to do with the fact that I'm so, like, I put so much value into people's times because I'm so time constrained, that having people using the time, and I know sometimes they really want to and they're excited that they can share, and I so appreciate, but it's really hard for me to like ask people to do that. But the funniest thing I've got is just people checking whether it's a scam. It's like, is this for real?
That is pretty funny, actually.
Evan, how much weight do you even put on listed references?
I don't put that much weight on them, which is a big part of the reason we do off-list references. Now, I still will speak to on-list references, although almost exclusively founders, because I think that if you ask the right questions, can get to things that, they're telling you things that are useful to you, but they don't necessarily realize like are giving up too much, right? Like I think if you probe and poke in the right ways, you can get information that's helpful to you, even if you have to pull it out in more discreet ways.
It's also important to say that, at least how I think about referencing in venture, is I'm not looking for dirt necessarily. Obviously,
No, not at all.
I want dirt to come out, but I'm really just trying to understand, who is this manager? Does how I understand this manager also reflect how other people that I respect understand this manager? As an example, I'm not a big deep tech guy. I don't know much, So for that reason, I need to talk to people that I already have diligence. I've already come to the conclusion, this guy is one of my go-to guys in defense. Okay.
Oh yeah.
Then I want to hear his perspective on this new manager.
Yeah. I'm not, to be clear, right? But we're not leaking this stuff to page 6 afterwards, right? Or whatever the European equivalent, right? Like, I want to know what kind of situations has this manager faced? How have they dealt with those situations? When things are going well, what is their behavior profile? How do they react? How are they involved? When things are not going well, how are they involved? How do they, right? So it's not about dirt. It's just about, you want to deeply understand, because you are investing in the manager's ability to access, to source, to diligence, to win allocation, to grow, to exit, right? And so you need to understand, like, maybe they're really good at accessing. And why did they win this allocation to a deal, right? They came in late. They didn't have the most attractive term sheet. So you really want to understand from a founder, like, why and how, right? And is that transferable and is that generalizable? So it's not about dirt, right? It's just, there are specific things that only a founder can tell you, and founders speak, right? It's a small world and they know. And so what you want to know is, do I really believe that this founder feels in their bones that this was the right choice and that they would recommend that to other VCs? And so I think there are ways to poke and prod and get close to those answers, but you need a holistic perspective. You need to speak to founders who are on the official list, because those are the ones with the best stories and where the company has gone really well. But you also need to speak to founders where the company failed, right? I reach out a lot of times off list to references where the company failed, because I want to know, like, when things were going poorly, how did this VC react? What was their level of involvement? Did they say, lose my number? Or were they with you till the end? Did they try? Were they still a valuable? Would you recommend them to other founders? Right? I want to know, like, when things were going well, like, how was that VC involved? What did they do? What was their value prop? But when things were going poorly, did they abandon ship, or were they still involved? Did they still try to be useful? What's sort of like their role and their responsibility when things are not going well, not only when they're going well.
I'll tell you a funny story on references. I really struggle asking people for the time. So I'm not good at coaching or even telling them what to do. And when they ask, I'm like, oh, tell your truth, whatever your experience was. So I'm going to take on Evan's feedback for sure. But it's so funny because I had this USLP speaking to references, and then we meet for dinner, and they go like, so you have to tell us, what was this theater? And I was like, what theater? And they're like, yeah, this play you took all these founders to. And this was 2 years ago, a year and a half. I took all Cocoa founders to see Dear England, because I thought you had so many kind of tips. But I hadn't forgotten, but it was clearly not front of mind, like fundraising and everything. But apparently he was like, every founder, they mentioned Dear England. And I was like, this is how little I coach. But again, how important, to Evan's point, it is like the little, like the everyday things like that actually do make a difference for founders. And that's probably what also comes up in references, even in the less expected or the most unexpected ways.
Evan and Carmen, thank you once again for joining me we are finding the name for this Little Weird podcast series.
Yes.
Today, I think I want to call it fundraising chatter or something like that, because
you call it the truth serum
or the truth serum.
You have like the truth serum going on.
Whatever name it ends up getting, guys. Thank you so much for joining me for it. To everyone who listened in today, I hope you enjoyed our conversation about brutal feedback, LP don'ts, and LP referencing. We promise there'll be much more of this type of chatter on the EUVC podcast.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.